In this video, I want to provide an introduction to the multidimensional model for professional accountants. So let's get right into it. So models help communication by providing a framework for understanding things. I want to show that in this video. Basically, everybody works with multidimensional information every day. They don't realize it, but they do. We're going to provide a specific overview of the multidimensional model. I'm going to try and explain why this is important. So consider the electronic spreadsheet. That's a model. You have workbooks, and workbooks have spreadsheets. Spreadsheets have columns. Columns have rows, and rows and columns intersect to form cells. That's a model. Most things are actually inherently multidimensional. So you'll see this when we get by the time this video is over. If you think about financial information, it's absolutely multidimensional. You know, a fact has an economic entity, it has a reporting scenario, a period, business segment, geographic area, etc. You may be familiar with multidimensional terminology by being exposed to business intelligence software. So the BI terms that are used are a little bit different than our term, but they're sort of similar. The terms that we use, that I'm using, they're more meaning oriented, and the BI terms tend to be a little bit more technical implementation oriented. I'm not going to go over each term here, but just to give you a sense, you can look at these terms, you can stop the video and look at these terms, and or come back and try and reconcile the BI term to the term that we're using to describe a multidimensional model. So the terms we're going to be using are fact, characteristic, fact value, fact table, relation, and grain, which we'll explain now. The best way to understand a fact is to understand the notion of a scalar. So a scalar is a fact which has no characteristics. It stands on its own. For example, the value of pi is a scalar. It never changes. The value never changes. It always has the same value for everyone, everywhere. You know, pi is the ratio of the circumference of a circle to its diameter, 3.14. A fact defines a single, observable, reportable piece of information contained within a financial report or a fact value that is contextualized for unambiguous interpretation by or interpretation or analysis by one or more distinguishing characteristics. So facts can be numbers, they can be text, they can be prose. So for example, the two facts above have the values of 2,000 and 1,000. However, the facts are not contextualized. A characteristic describes a fact. So a characteristic is a property of a fact. A characteristic provides information necessary to describe a fact and distinguish one fact from another fact. A fact may have one or more distinguishing characteristics. So for example, above you can see the characteristic of concept for the number 2,000 is revenues, as opposed to the concept characteristic for the second number, 1,000, which is net income. But facts usually have more than one characteristic. So let's look at some other characteristics that would be on a fact. So here you can see a fact with multiple characteristics. You see the reporting entity, the legal entity, the period, the concept. So you can see that there's more context for the values of 1,000 and 2,000. And that's what characteristics do. They contextualize the information so you can tell one from another, and then you have information about the fact. So again, here you can see the characteristics, and you can see the value. So let's dig into this a little bit deeper. So a fact is the value and all the characteristics which describe the value, including the traits which further describe numeric values, units, and rounding. So above, we know that the value 2000 is for the concept revenues in the period January 1st, 2011 to December 31st, 2011. It relates to the legal entity, consolidated entity, for the reporting entity, ABC Company. We also know that it's a numeric value and is expressed in US dollars and rounded to the nearest thousands of dollars. So a fact table is a set of facts which go together for some specific reason. All the facts in a fact table share the same characteristics. So above, you see a fact table outlined in green that contains 3 facts, each one outlined in red. Each of the 3 facts share the characteristics reporting entity, legal entity, geographic area, period, and concept. You can also see the units and the rounding that relate to those facts. So that's what a fact table is. It's a set of facts that go together. So relations we're starting to get into a little bit more complicated terminology. A relation is how one thing in a business report is or can be related to some other thing in the business report. I'll just give you an overview here. So these relations are often called business rules. There are 3 primary types of relations. So there can be others, but there are 3 primary types. You have a whole part, you have an is-a type of relationship, and you have computational business rules. So I think I'm going to stay with that explanation right now. I'm going to do another video on relations later, but that's what a relation is. It's just pointing out that things in a business report can be related to other things in a business report. So grain is the level or depth of information or granularity of the information. The lowest level of granularity is the actual transaction, event, or circumstance, or other phenomena in a financial report. But you can have information that is summarized. So here you see information for North America and for South America. And again, there's probably detailed transactions that relate to the totals in North America and South America. And then North America and South America describes the total of all geographic information. So you can kind of see 3 levels of granularity that I'm talking about there. So you may be asking yourself, so why is this important? What do I need to know the multidimensional model? So take a look at this video and think about what is necessary to implement something like that within a software application. How would you describe the pieces of what you see there? So that's what a model does. So again, think back on that rotating object that we saw. So models help communication by providing a framework to think about something, a framework for understanding. So just like a spreadsheet has a model and that little object has a model, a digital financial report also has a model. So again, multidimensional is not something technical or scary. It's something that you work with every day. You don't realize it because no one really gave it a term, but when you want to explain these things to a computer, you have to provide it. You have to give names to things that you typically don't refer to when you are dealing with humans. So that is an overview of the multidimensional model. And the reason that it's important is because you need to have some sort of model to implement a digital financial report within a software application. And this model is how that's done.